All right, founders, it is time for another pitch deck critique and review. And this time we have a pitch deck from Aquaveg. I don't know what else to say other than there's so much going on in this deck. I'm torn because there are a lot of good things going on in this deck. And then there are things that are just, I'm just going to be straightforward, nonsensical. You lost me talking to the founders here. Appreciate you giving me an opportunity to critique this deck. We're looking for a pre-seed here. This is a pre-seed deck. And I'm going to say this deck, we're at about a 50%. And that's a 50-50 for me because I'm not sure where to go with this, but I'm just going to dive into it anyway. And you're going to see how I break this down and what my thought process is on how I am interpreting this. And maybe you can start to see, wait a second, if Ed is thinking of it this way, maybe other people are thinking it this way, and you will start to be able to make adjustments. So I'm just providing the feedback. Before I continue, my name is Ed Kang, 7-time funded fighter with 2 exits. Just means I failed a bunch of times. And it's a fancy way of me getting your attention and saying, I want to help you. If you're an early stage founder, you're raising pre-seed or seed, or you need to go get that traction to go raise the investment, I want to help you avoid some of the catastrophic mistakes that I've made, which is the reason I make these types of videos, to help out all founders out there and just in generally want to contribute because it's tough enough as it is. Not to say that you're not going to make mistakes, but I'm going to try to make your life a little bit easier. In my day, I've raised over 9 figures of funding for my startups, other startups, and funds. I've looked at a ton of decks. I work all day long at startups.com with founders trying to raise money, and I'm going to give this one a review. If you like this type of stuff, please hit that like button, comment, subscribe, all that good stuff. I appreciate the support. Let's jump into what is going on here. We are a D2C distributor of exclusively high-quality organic vegetables grown sustainably. I want all the founders who are going to watch this, if you're watching this, it's because these founders here have been very gracious and courageous to allow me to critique this deck and to put it online. This is a good statement in many ways because it's so straightforward. This is like a sentence elevator pitch. I like it. We are a D2C distributor of exclusively high-quality organic vegetables grown sustainably. You can easily just say D2C distributor of, get rid of this, organic vegetables grown sustainably. D2C distributor, make it a little better in terms of the grammar, D2C distributor of sustainably grown organic vegetables. Exclusively high quality, those are words that you don't have to have. That's marketing fluff. You don't need it there. This is just very straightforward. You're D2C, which explains the type of business model that you have, and you're distributing organic vegetables that are sustainably grown. Here's the problem with this right here. You're going to see as I go through this deck, this is not what this startup does. This is a great statement, but it doesn't actually describe what the startup does, or does it? And that's where I'm starting to get very confused, and you're going to see why I'm confused as I go through the rest of this deck. Here we are at the problem. And the problem with this problem statement is you have immediately started me off with a graph that I have to read. So if you're going to say anything, put it up here and put this headline above the graph so that I know what I'm looking at and the reason the graph supports this headline or the headline makes this graph make sense. That's the first thing. So order of the information that I review and how I read it and how I'm going to interpret it is very important. But let's read this here. Sub-Saharan Africa is the only region with below average GFSI. GFSI stands for Global Food Security Index. First of all, get rid of the acronym. Just say Sub-Saharan Africa is the only region with below average global food security. Now, again, here's the issue, and I'm leading up, and I'm sorry if I'm doing this build up for everybody, but this is not necessarily the problem that we're trying to solve, or is it? This is the crux of this deck. If we're looking at the issue of global food security, well, that's one thing. So we're going to say global food security is a problem in this area. Keep this in mind. Stick with me here because I'm going to show you how I'm interpreting the rest of this deck. Now we have another problem statement. As soon as you have to tell me problem statement in 2 slides, then you're in trouble. We're going to go number 2 right here. And this is a little better because it's got some headlines. So let's read this. Below average global food security indicates that high quality, safe food grown sustainably is less affordable and available. I'm going to argue against that. I may not quite understand, but for me, food security doesn't necessarily mean that you need sustainable and high quality. It just means you need food, but I could be wrong. But the reason I bring this up is because immediately I'm taking it in the head of an investor because I don't understand. You haven't explained this to me. So I know a little bit about food security. I'm just thinking just access to stuff that isn't processed, a McDonald's, or food that's not made of high fructose corn syrup. That's what I'm thinking global food security. but I may be wrong. And you may be sitting here going, Ed, you have it so wrong. But how do I know? I'm reading this. You're not there in my mind. You don't have the luxury to give me a voiceover to explain and say, no, Ed, you're not getting it. So make it clear in your deck. Let's look at this one. According to the FAO, the rise in population demands an increase in food production by 60%. Does that mean they want organic, sustainably grown food? I know affordable and available, yeah, for sure, but I'm getting mixed message here. Increasing food production in sub-Saharan Africa without addressing the inefficiencies that burden food security will only amplify the problem. Okay, you made a pretty big statement, but how do you know? What's the evidence? You're making this very, very hyperbolic statement, which may be true, but it's what a lot of founders get into where they've got really big dreams and big visions. Now, you lost me as an investor, and you're having to make a scientific argument to me without data, and I'm having to think about it, and that's just not going to work. I still don't know what problem you're solving. You're still setting up the problem. This is what I'm getting at. Here you have a solution. We produce and source exclusively high-quality organic vegetables grown sustainably. You produce and source. First of all, I'm confused. Do you produce or source? You're doing both, and immediately a flag goes up for me because it sounds like two business models, first off. Next, exclusively high quality. What does high quality mean? Organic vegetables grown sustainably. Now, you just spent the problem slides telling me about global food security and that we need to produce more food, but now you're telling me that you sell high quality organic vegetables. How does that solve the food security problem? As far as I'm concerned, we need way more than just vegetables. It sounds like I'm being pretty harsh right now, but I'm actually taking you into the mind of how critical an investor is going to be and how quickly you're going to lose them if you're not super clear. I promise you, I'm going to bring it all together and I'm going to land this thing. Just hang with me. Next, you have another solution statement. We sell direct to consumer, D2C, where we deliver to customers' homes. That way we make safe food available to everyone. That's great. Direct to consumer and deliver to customers' homes, that's fine. You're making food available to everyone. You're not making food available to everyone. You're making vegetables available to everyone. This is an issue here, all right? You see all the cognitive dissonance that I'm experiencing. We do not charge a premium price for the premium vegetables, making it affordable. Now, you've got another solution statement. You made three statements that are pretty big. I just want to pause here for a moment. I'm not throwing shade at these founders. You're going to see through the rest of this deck that I'm actually quite impressed with all the thoughtfulness that's gone into it. This startup has actually been recognized for what it's trying to accomplish. I dig the fact that there's a big vision, there's a big purpose, but for the sake of startup funding, especially for the type of funding that you're going to need, this team, these founders are going to have to go and narrow things down, figure out a beachhead, land and expand to prove that they're the founders that can pull this off. And you've got a better than 0% chance if you actually focus the model and figure out what is the problem, what is the solution. And you may be thinking, but Ed, we solve so many problems. This is a big problem, food security and all this stuff. I get it. But where are you going to start? Because an investor has to trust you with their money. This is not a charitable investment. You're not going to get Bill Gates coming along and just dropping $10 million on you and saying, go for it. This is an investor that wants to make money back. And if your vision is too big and you're trying to solve this big problem, they don't believe you can do it, and it's too much at risk and it takes way too much capital, you're not going to get the investment. So we have to figure out how to narrow this whole thing down. And I have faith in these founders, based on everything that I've read here in this pitch deck, that you can figure it out if you just listen to my argument and just be open. Not saying I'm right. I'm just telling you, this is what I'm thinking. This is what goes through my head when I read this pitch deck. Here's another solution slide. If you're making a screener deck, now we're on solution slide number 2. That's not going to cut it, but let's read this. And all these statements could be either combined or they're just irrelevant. But let's look at this here. We produce our own vegetables and fish using aquaponics. Now, this is the first time aquaponics is introduced. And I know a few things about aquaponics, and I'm digging it already. I love this word because it's farm tech of the future. Why doesn't this word appear earlier in the pitch deck? But now you planted a seed of doubt. There's interest, but there's also doubt. Are you an aquaponics company or you're a D2C distributor of food? I don't understand. I'm getting mixed messages, but I see some logic behind what's going on here. We just have to make it more clear. Aquaponics, next statement. Aquaponics farming produces both organic crops and edible fish. Why are we bringing in fish? I understand why we're bringing in fish because that's a good source of food, but you haven't even mentioned fish up to this point in time. So why are we bringing in fish? That's what I want to know. And then next is we source vegetables from third parties who are aquaponics and organic farming practitioners. Now, this actually is a compelling statement. If your whole startup was nothing but we distribute vegetables and fish from aquaponics farmers and organic farming practitioners, now I've got something that I'm interested in. But this word here, you produce, do you actually have your own aquaponic farms? I don't understand what's going on here. Now I'm getting mixed messages again because production and distribution are two completely different business models. And like I said, I don't believe that you can do both at the same time. And that's what most investors are going to think. The smart ones, anyway, they're going to question your ability to pull that off. You better have some really big evidence to back it up, or you're going to have to pare this down. We source vegetables from third-party aquaponic farmers or aquaponic organic farming practitioners and distribute them. That might be something that's compelling. Or you can just say we're a big aquaponic farm, or we're going to make farmers use aquaponics or distribute aquaponic farming equipment. There's so many ways we could go with this. But like I said, this statement is pretty interesting to me. Now, if we want to get more confusing, let's look at the revenue model. We've got revenue one, aquaponics farm. We earn 10% margin on every sale. Do you have an aquaponics farm? I need to know. How long has it been in existence? What have you been doing with it? If you have an aquaponics farm, this is really interesting in terms of you're selling direct and you could have future plans, but I don't have enough information. Labor services, $660 per farm per month. I don't understand. Are you selling labor services to other aquaponic farms? What's going on here? Do you empower other aquaponics farmers with labor and then take 10% from them? And again, you might be sitting there thinking, Ed, you just don't understand. You're right. I don't understand because it's not clear. Finally, you got revenue three. We buy organic vegetables, 1 unit for $1 and sell it for $2.50. I still don't understand. You've got multiple revenue models, and now I've got more doubt going on here because are you sourcing? Are you selling? What's the point? If you're making this amount of margin and you're representing 93% of your revenue from that, why would I have these other sources of revenue? And remember how I said over here, it would be really interesting if you were just sourcing food from aquaponics farmers and distributing them, and you had something special to do with that, and that was 93% of your revenue. That was the lion's share of your business. Well, you've just argued this case. You fortified your case to axe the rest of this business model. Unless there's a very good reason, which you have not explained to me, it's all put together. This slide you've just repeated: aquaponics, direct sales, labor services, organic vegetables. Combine the two slides together. If you're going to do that, you only need one slide per section of your pitch deck. Market size. Now, let me give you kudos on the market size. It's a solid TAM-SAM SOM. Now, remember, I'm not going to argue the merits of what you've chosen, but you've segmented properly. You've thought it through, and you show me the math. You're saying your TAM is 278 millennials in Africa. I love the fact that you didn't say it's X amount of billion people that need to eat food. All right. You just said here, it's millennials in Africa, because that's what your business model is going to focus on. And you've made the statement, right up here, which is great. And then what you did is you showed your math. So you looked at 278 millennials. This is for other founders who want to know how to do TAM, SAM, SOM. And then you multiplied it by the annual purchase. And that's how you get 63 billion. But then, Sam, you said, all right, well, our business model, we're going to focus on the millennials in South Africa because of distribution, things like that. Your business model better suited there. And if you did the math there, it's 4.5 billion, which is great. And then you said, I'm going to look at the 11% of the millennials in South Africa that earn above average income. Here we go right here, and 500 million. Now, here's the issue. Once again, you've put yourself in a deeper hole because right away, South Africa earn above average income. That's who you're going to be selling to. I thought we were going for food security. If you're going for food security, then why are you focusing on the 11% of millennials that have above average income? So here's what I'm thinking you've done up at this point in time. You've come up with a great potential solution to sell aquaponic grown organic food to a solid market. Healthy food, which is important. Aquaponics, future tech, allows farms to scale, produce more food, etc. And then you're going to sell to these South Africans that have higher than average income, make the money there, and then maybe give food away and start to grow this ecosystem. I get what you're trying to do. But what you've done is you've muddied up the message. You started off saying we can solve hunger. We can solve food insecurity in sub-Saharan Africa. And then you went into this totally different model that was the antithesis of helping people buy cheaper, more available food. Get your story straight, figure out. And there's nothing wrong with saying we're going to sell to this group of people here who can afford it because, let's be honest here, organic and everything like that, it's still not at the price point where the average person can just go and buy it. Trust me, when I go to the farmer's market, it's tough compared to just going down to the big box grocery store. It's okay to have the story saying we're going to make money here and then we're going to slowly expand, and there's a social impact component to what we're doing. But just be upfront with the story. Figure out how to make it very clear and explain it. And that's what I think is going on. I could be completely wrong, and you're shaking your head through YouTube right now watching this video, but then help me understand it. I look forward to comments and dialogue. Unless I'm wrong, leave the comments below. Let's talk. But back to this slide. Kudos, everybody watching this. This is how you do a Tam Sam Som slide. It is a bottom-up analysis versus top-down. This is how much people spend on food, or this is the organic food industry. I dig it. Nice work. Traction. Now I get to something interesting. You've got an aquaponic farm that you sold $340,000 in 9 months with just a prototype. Let me just say this right now. This is fantastic traction. The fact that you've actually sold all this food in 9 months with just a prototype. But now I got a bigger problem. This traction is telling me that you should get into aquaponic farming and help other people do aquaponic farms and sell it. How did you sell it? I love this, except for the fact that it's in line with the business model that I've been thinking all the way up to this point in time, making me even more confused. You've got data. You have 15 individual clients, and you have production capacity of 3,960 units per week. If you went out and you said, we've done this amount with Aquaponics Farm, and we've sold this amount, and we've got 15 individual clients. All these different farmers need it, and we're just going to be a company that helps farmers build aquaponics farm and sell $340,000 worth of vegetables in 9 months. Man, that's a solid investment. This excites me. But it's not the business model. This is not distribution. This is not D2C. You're not being a platform. You are really sort of a farm tech as a service, or farming as a service, or aquaponics as a service. Maybe you got B2B software, what have you, but you're solving the basic problem. Maybe the problem is there are many farmers that need to get into aquaponic farming, but they don't have access to the expertise, the material. They could be making so much more money, making their farms profitable, growing more food for everybody, and solving food insecurity in the region. If that's the problem, you say, give me a whole bunch of money to buy all this equipment, go to the farmers, because we've proven it. We've done it with one farm, and we can do it over and over again. And we're empowering the everyday farmer to grow vegetables and raise fish using aquaponics. That's a solid business. I know multiple investors that will be interested in that right away, not the other D2C stuff that you've been talking about. But if you went to the D2C stuff and you're a distributor, you went and bought all these vegetables from aquaponic farmers, you went and said, we're a solution for all the aquaponic farmers in our region, and we're going to distribute, because that's going to create a market where they go out and want to start aquaponic farms, because we're buying and sourcing and we're selling it. Completely different business model. But guess what? I have investors who'd be interested in that as well, if you prove to them that there are enough aquaponic farmers and this is sustainable, which is the reason you might want to go right to the basics and solve one problem. How do you get aquaponic farms up and running in sub-Saharan Africa to the point where they can be revenue generating, just like you demonstrated? I'm going back to my point that I hope you see that I'm not being critical, but there are two different business models in here. Actually, 3 or 4 if you're doing labor for these aquaponic farms, which would be a completely different HR-based farming type of business. Figure out one thing that you're going to do. Stack rank all your problems and say, if we had to solve one problem, this is the problem that we want to solve. And you're going to have such an easier time raising investment. We sell directly to consumers via our website. Our target audience spends an average of 4 hours a day online, etc. That's the go-to-market. Here's the question. When you were doing your aquaponics farm, did you use D2C on your website to sell $400,000 of vegetables? I need to know this if you're going to be making this argument. Next, selling direct allows us to cut out the middleman. As soon as you said selling direct, D2C, I'm thinking a whole bunch of different things. Remember, a different business model. What's your delivery system? How do you scale? How do you make sure that vegetables don't go bad? There's so many factors that you haven't addressed yet, and I don't know if you're going to be able to address them. Now you're making it even more complicated. You're saying we also sell using a B2B to C model to acquire customers, where our partners earn a commission off every sale. This will result in lower customer acquisition costs. You've mixed another model here. You got D2C, and then you got B2B2C, which is a completely different business model because it's got channels and all that stuff. I don't doubt for 1 minute that if you got up and rolling, you got your investment money, and you've got tens of millions of dollars in dry powder in the war chest, you could start to expand and try all these different things. But you are trying to raise pre-seed. I need to see one consolidated story, business model, the one that you think you would be most successful at. Now let's look at another potential configuration here. I'm working with you. Let's say you have an aquaponics farm, and you said to investors, we had our own aquaponics farm, and we had our own vegetable inventory, and we were having problems selling it at farmers markets or selling it to businesses. So we started this website, and we went D2C, and it took off like gangbusters. And so what we want to do is, since we solved the problem, for ourselves, we're going to create a platform. We're going to become the Shopify for aquaponic organic vegetables in sub-Saharan Africa. That makes sense to me. And we're going to create this hub where everybody else can plug into it. You could be telling that story. But then automatically, just like I pointed out here, the investor's going to be thinking, well, how do you know that you can start to scale that operation from just you? Because it's easy to drive vegetables from your aquaponics farm to the customer. But what happens if there's an aquaponics farm over there, over here? Do you have a warehouse? What's going on? And you better be ready to raise a lot of money for a distribution center, which I know you're not because I saw the rest of this deck. Let's keep going and you start to see how I'm breaking this down. Competitive advantage slide. You just complicated even more. You said crowd investing platform. Are you building the platform? What's going on there? Since the construction and operation of the farms are funded by our crowd investors, financially speaking, we can concentrate on customer acquisition. So you have your own group of crowd investors. What's going on there? Is that the business model? Because that could be a great business model. Let's imagine you're saying we crowd fund aquaponics farms. That's what we do. That's a great business model as well, because all the people who invest in these aquaponics farms could be customers. But now you got to give me some data in terms of, well, what happened? If you're developing your own farm and you sold all those vegetables in 9 months, how much of that was actually crowdfunded? Because if you're saying this is a competitive advantage, you better be able to back it up and tell me that you've already done it. After 11 years of experience, we've developed a unique aquaponics system. Another argument for you to become a company that helps farmers become aquaponics farmers. It produces better and higher yields at lower cost. How do we know? Need some data, try to get a little more specific, and allows it to sell without charging a premium. We also leverage IoT, blockchain, and artificial intelligence for maximum efficiency. What I'm starting to get the feeling of is that you are trying to create so much buzz that you do not need to create, because I don't believe you. I don't believe that you have integrated Internet of Things, blockchain, and artificial intelligence. You better show me in your farm. Now, if you have, and you've sincerely done it, then I'm going to say even more that you need to become a company that just helps farmers become aquaponic farmers. Forget the distribution of vegetables for the time being. Let them distribute the other ways, but focus on raising funds for this technology or help them crowdfund for that technology. I don't know what's going on here, but here's food for thought, pun intended. Go to market. We're providing our target audience with more convenient access to higher quality and cheaper products. Okay, yes, that is a given. We provide them with peace of mind. Yes, that's a given. So you don't even need all this. This is just all buzzy words that you don't have to explain. Just get me the real goods and tell me problem, how are you solving it? What's your unique insight? Do you have proof? How does it work? All that good stuff. Here's the executive team and more evidence that you should pick a business model that deals with aquaponics. You, as the founder and CEO, you're an expert with 10 years of experience, and you studied aquaponics in UK, Australia, and US. That is fantastic. This is amazing. Domain expertise. You figured it out. You are not a domain expert in D2C, distribution. You are a domain expert in aquaponics farming. Co-founder, CFO, 40 years experience in the financial sector. Doesn't move the needle as much, but it's great that you've got a co-founder who can help you with the business side. And this is fantastic. I can understand the reason you won the Best Student Startup Award here, because it is impressive what you were able to do. Now we get to the financial slide. We will soon be looking for pre-seed funds to launch our subscription boxes and achieve problem solution fit within 8 months. You're raising $400,000 to do what? Launch your subscription boxes? Do you even have the infrastructure? How is this even working? You haven't shown any evidence up to this point in time that you know how to launch subscription boxes. You have shown me lots of evidence that you know how to launch aquaponics farms. So if you told me you're raising $400,000 to launch 10 more farms, crowdfund and get them going, then that's a really interesting value proposition here. But this financial slide does not make sense only because you don't know what business model you're raising for, or I don't know. It's too confusing. I'm lost by this point in time of what the startup actually is. And so therefore, I don't know where the $400,000 is going to go. And I have no idea how to evaluate this slide. Next is your milestone slide. There's a big issue here because you are assuming that you're going to raise these subsequent rounds. This does not work anymore. You have no idea that you're going to hit those milestones. If anything, this slide is going to make investors think one of two things. One, you have no idea what you're doing whatsoever, and you're just throwing this out there willy-nilly. Or two, you really have no idea, but you're the type of founder that hasn't really thought it through, and you're just putting this out there to say all the buzzy things once again, saying that you're going to get to Series D in 18 months after. Let's look at how many years this has to go by, how many years out you are. You're 5 to 10 years out. You have no idea if this is really going to happen. Don't put yourself in this situation where investors start to wonder and doubt if you are just inflating your own ego, or you're putting so much friction that they have to look at this stuff that they start losing interest and they don't believe in you anymore. And that creates a lack of trust. And you don't want to do that with the deck right out of the gate. And then finally, the contact slide. Here's the issue is that you've got this big article here. I didn't even know it was a contact slide. I don't know where the contact is. So if you need to explain a why now slide, such as this slide, which is a whole bunch of marketing hype, I wouldn't even include it. Separate it out from your contact slide. There you have it. I hope this was helpful. I don't know if it was, now that I'm just reflecting back, but I think if I had to summarize what I want you to do, go back and pick one business model and make it super simple, and use the business model that you've already proven a tremendous amount of traction in, and domain expertise. You've got a solid team with your domain expertise there, and you have traction. You've shown the results of an aquaponics farm and how you sold the vegetables. Scale that and say, we're going to help a whole bunch of other farmers do that. Forget the subscription boxes. Forget the D2C and sourcing from other places and bringing it all together in a warehouse for a subscription box. Just get the aquaponics farm going, spike the local food ecosystem, help those farmers, those poor farmers, get to the point where they can contribute to food security in the area in sub-Saharan Africa, and you've got a really worthy cause on your hands, and you've got the expertise to do it. Get rid of all the buzzy words, simplify it down, send this deck back to me when you made adjustments. I'm happy to work with you. For all you other founders out there, if you're interested in getting your pitch deck reviewed and critiqued, just leave a comment. I'll let you know how to get it to me, and we'll go from there. Thanks for checking this pitch deck, critique, and review out. I'll see you in the next video.